All right. Good morning, good afternoon, good evening, wherever you are on this beautiful planet. Welcome to the Inner Circle Live pre-New York session. I'm your host for this morning's session, Vinny Allen, along with my awesome partner, Mr. Ryan Carthage. And as always, we're so happy and grateful for each and every one of you being here with us this morning as we take a look at the technicals and the fundamentals to see what we can take advantage of in the Forex market as we close out the week. So without further ado, let's make sure that we turn off any and all distractions, grab a pen and paper, take lots of notes, and let's make sure that we participate and engage. So if everybody can hear me loud and clear, and you're all ready to go on this Friday morning, do me a huge favor, drop me a 1 in the chat. Let me know that you can hear me. There's no technical issues and we are all set. Good morning, Kay. Good morning, Benit. All right, I see the ones coming in. All right, so let's exit out. Let's make sure that we start with a strong foundation, that we take massive action. That's the credo for the Forex trade room. Let's make sure that we're accepting all possible losses before entering a trade, preparing for any outcome. Let's make sure, right, that we take that deep breath and we center ourselves in body, mind, and spirit, ensuring a balanced approach to trading. Let's make sure that we trust in our education, strategy, trading skills, and intuition. Let's imagine our trades successfully materializing, and let's make sure that we obey our trading strategies, avoiding decisions based on greed and fear. And, right, like we talked about yesterday, let's make sure that we are never looking back or stopping once our trade has commenced. We know that is always tough to do. It doesn't happen overnight. It takes time to get to that point. So if we are all set, if we're ready to take massive action, let's go ahead and get started. So close these out, get rid of some of these tabs, and get this day going over to the Forex factory, going back, taking a look yesterday, right? The 22nd, we saw the retail sales numbers come out for Canada, right? Core retail sales just came in just under. Retail sales month over month actually came in over, right? Came in over. So just slightly, so kind of right around expectations in both areas, slightly missed the core retail sales, right? Which we know is going to exclude the food and energy costs and things like that, which could be highly volatile. Unemployment claims for the United States, right, came in good, right? So expected was 217,000, came in at 201,000. So good, better than expected. So the economy just keeps rocking and rolling. Flash manufacturing PMI came in over, right? So manufacturing, right? PMI 51.5. We know anything 50 and over 50 is expansionary. Flash services PMI came down a bit, still over 50, right? So looking pretty good. Existing home sales in the United States came in at 4 million. The expectation was 3.96 million. All right. So things just keep on rocking and rolling. We had an FOMC member, right, speak yesterday, Jefferson, to see if there's anything on that. Patient stance at rate cuts warns of easing too much on improving inflation, right? So holding, right? Continuing to hold, that's across the board. New Zealand retail sales, corporate retail sales both missed in New Zealand. So we know the New Zealand dollar has been fairly strong. And we see here that we've got a retail sales number that missed both the core and overall, right? Quarter over quarter, right? So FOMC member Cook spoke. So sources of uncertainty in the short run and long run. So just continue to be cautious before cutting rates. We had a bank holiday in Japan yesterday. We had Waller speaking. Let me see what Waller had to say yesterday. Look at Twitter. CRA's predictable management should not cause a major crisis. I had to look more into that. So that was something other than what the other two were really speaking about, right? Different angle on that. So we have to take a look at that. And then where were we? The policy meeting minutes. So there's an article here that I'm going to send you guys over from ING, right? That's Christine Lagarde, head of the ECB, saying here that the European Central Bank It's not really known as a central bank that makes swift shifts in its policy decisions. The minutes of the ECB's January meeting nicely illustrate the currently ongoing shift in the ECB's inflation assessment, but the very cautious and gradual shift suggests that rate cuts in spring are highly unlikely, right? So you're getting it across the board pretty much from your central banks, okay, that not time for those rate cuts yet. Instead, the ECB will want to wait until first quarter data confirms receding inflationary pressure, a modest economic recovery, and no acceleration of wage growth to slightly reduce the current monetary policy restrictiveness. All right, and there's some highlights. So we'll put that article in the chat for everybody to read. All right. So you guys can take a look at that from those meeting minutes. So we're getting clarity on where these central bankers stand. Okay, so we'll close that out and move it over to trading economics. German business morale improves slightly. Okay, that's good. That's good. So business morale is up slightly in Germany, right? Largest player in the Eurozone. Okay, so that's important. European gas prices lowest since May 2021. That's good for inflation. Euro area in regards to energy costs, that's good for them, right? We know that was a long battle, especially when that war originally broke out over there. Energy prices, right, was a huge issue. And then we see Euro area inflation expectations edge up a bit. The big there, Japan, pretty much the same thing. European shares, that's a stock in this whole multi-year highs, right? So stock market, indices continuing to rise, especially after the reports came out from NVIDIA, right? Still doing this thing, right? So S&P up and major indices up, okay, as a result. So any questions regarding any of the fundamentals on this Friday morning, favorite day of the week?
I have a question.
Sure.
They said the U.S. just released sanctions on Russia, so I was trying to figure out how would that affect everything.
Not sure. I have to read up on it because it depends on what the sanctions are. You know, um, they've done that before, right? They've done that before, and things keep moving right along. So we'll see what happens there. So right now, Joy, I don't have an answer. I saw that too. But we don't, we'll see how that goes. Not sure how to impact it yet. To read more about the details on what the sanctions are and what sectors it could impact. Great question, though. Any other questions? No? All right, all right. Ryan, good morning, sir. How are you? All right, so we're gonna move on. Moving on over, we'll trade close out. Well, I'll leave that open because I need it later. But taking a look at the DXY, right? So as a matter of fact, let's read up on the DXY, what's going on. We see the dollar index stabilized near 104 on Friday after dipping to as low as 103.4 in the previous session. As another Federal Reserve official indicated that the central bank could start cutting interest rates much later than the market expects. Fed Governor Christopher Waller said late on Thursday that the Fed should delay rate cuts by at least another couple of more months to see if January's hot inflation report was a fluke and that the Fed is still on track towards its inflation target. All right. He added that acting too soon could squander the central bank's progress in inflation and risk considerable harm to the economy. On the data front, flash S&P, the global PMI showed the U.S. private sector actively slowed in February, led by softer than expected growth in services, while manufacturing output rebounded, right? We covered that. Initial jobless claims also unexpectedly fell this week. All right, so a cautionary tale in regards to when those rate cuts are going to happen. All right. All right. Ryan, what's going on?
Good morning, bro. How are you, man?
Man, I'm doing good. It's Friday.
Yes,
It's
sir,
all
it
good.
is. No, my apologies, dude. Some audio issues on this side.
Oh, yeah. I saw. It's all good, man. It's all good. Anything on in regards to the fundamentals that you might have caught on to as we closed out Thursday?
Nothing additional yet. I am looking into a couple things, the Russia situation, and looking at some details on the yen. So by the end of the session, I might have some additional information. If not, I'll post it into the group.
Okay. All right, I gotcha. And what was it? Was it a confirmed cyber attack with AT&T yesterday?
I
The nationwide outage?
haven't been able to confirm or deny it. The news is saying no, but
Okay.
from specific individuals, they're saying yes. So I don't know. I'm waiting on my guy that actually works for them down in Texas to get back to me and tell me what he knows. So we'll see.
That was great. That was crazy, man. Like I was saying yesterday, I'm driving and my GPS went out on me, man. I was lost out there. I was lost. I'm like, I
Sheesh.
I should have listened to my grandmother. Told me you should always still print your directions.
Always print the directions.
What a mess that was. I'm like, oh man, here I am traveling and no GPS. I'm like,
Right.
man. So
Glad you made it safe, bro.
yep. Yeah. So old school, follow the North Star, I guess, except for it was in the middle of the day. Yeah. So here we are taking a look at that dollar, right? Still bouncing around, right? Still bouncing around, right? Holding, holding at that level. So not much to say that we'll see what it wants to do. This is taking a look at the 4. Okay. We know still overall when we look at from a weekly perspective, right? We can see that it had been bullish, and now it's just kind of this is about to be the second week in a row where we're kind of just neutral, right, on the dollar. Okay. Any questions on the DXY? No?
No, sir.
All right. Well, hey, it is Friday, so right out the gates, I'm going to ask you guys before I start tearing through what I have. Uh, do you guys have any pairs, right, that you want to take a look at? Any pairs that you want to take a look at as we get going? You can put them in the chat. Let me know. Oil and gold. Oil and gold. Okay. Gold, another person for gold. All right. So let's look at the fundamentals on it, right? Let's look at crude oil. Crude oil futures eased towards 78 a barrel on Friday, where we're still set to end the week little unchanged as investors continue to assess various demand and supply factors. Earlier in the week, oil prices tumbled nearly 2% as a higher for longer interest rate scenario and demand side uncertainties weighed on the market. Stronger than expected U.S. inflation data bolstered best at the Fed. We'll have to keep the borrowing cost at elevated levels, while the IEA said in its monthly report that global oil demand is losing steam due to the shift towards renewable energy. That's a big one to watch, right? In the future. Agency said energy, let me see. What did I say? Meanwhile, the market recouped those losses towards the end of the week as supply concerns resurfaced amid rising geopolitical tensions in the Middle East. Data from the EIA also showed that U.S. crude inventories rose less than expected the following week, right? So if we go over, right, knowing what the fundamentals are, we take a look at oil, right? We can already have an idea of what our charts might be looking like. Okay, so if we come across here, so we're looking at second week now, right? Where we had gains to the upside, and then we pretty much taking it back, right? Taking it back. So that's from a weekly perspective. We come on down to our 4. Okay. And we can see that, right? We got a 382, and now it's correcting back to the downside. Right? So we're just range bound. We're just range bound. Here we are on the 1. Okay. We're pulling back. So we've already gotten a deeper correction on the 1. So we're just messing around this AB boundary. So you can tell from that weekly chart where where it's just ranging, right? So we had to move up, and now we're getting that move back down. So nothing doing there besides having a lot of patience. Okay. That's all I have on oil right now. Right. So we got that initial bullish move to the upside. Now it's just ranging within our AB boundary. Any particular questions on oil?
No, I'm just validating playing the range. That's it. Thank
Yep.
you.
You're welcome. You're welcome. All right. Let's move on to gold. Right. So let's go through and let's clear this out. Let's just redo this chart. So get a clear picture of where we are, right? So we'll go to the monthly. Okay. And we close this week bearish, and we're going to put in that high right here. Second, there we go. Let's mark it up. Like so. So about side low. Okay. You see the price action is tight right now. So let's put in our support levels. Hopefully like that. Okay. All right. So all right, see where we're stalling a bit, but you can see overall, right? We've been making higher highs and higher lows. Okay. Let's take it down to the weekly. See what we have as far as our levels. And we can see how, bring this down a little bit, and we can see how we broke, right? That support level, then price closed back above it. So what happens with smart traders, they put that level back in there, right? When that happens. See? Because we don't have an official new swing low yet, right? It'll be another week before that one confirms. So we'll put these levels in like so. This one as it is. We'll take off our smart support. That's what we're looking like at right now. Okay. All right. So we're retesting a zone. Right. Right there at that 2000 level. We're retesting that area now, and price is just moving sideways, right? What is it going to do next? But you have the dollar, right? We looked at the DXY, and that's kind of bouncing around, right? Moving sideways, okay? And so here we have it, past resistance, becoming future support. That's where we are from a weekly higher time frame perspective, okay? Let me Scan these fibs, see what we're looking like. Okay, so that's your near term. Okay. So still bullish, right? We got an extension. It's this just above that high. 2171. Okay, that's a weekly extension. So I am going to mark that. Just like that, so we know where we are. And we are going to link everything down. Well, let me take this fib off first, because I don't want to carry that. There. Okay. Come down to our daily. Put some levels in. And you can see as we zoom in, right, huge bullish engulfing candlestick there. And then we're just moving sideways. Right? We're just moving sideways. So let's put in some daily levels. Put this down. So we'll take this here. It's a nice low that it put in. All right. All right. So kind of just whipping around right now, okay, which can make it, tough to trade. All right. There we go. All right. So that's your daily move on gold. Okay. So still within the AB boundary. Look at how it pulled back, right? Monthly support level, 1611.80, right around your 618. Price took off from there. Okay. We double bottomed here. So you can see a beautiful C to D move. Okay. Beautiful C to D move. All right. So we move down to our 4. Let's roll back. Oh, the circle not come down. Just run it forward. So I'm gonna check out something here. Across the lows. Okay. Keep it moving. Keep tracking the price action. There we go. This is where we are. 4. Still sitting within our AB boundary and just moving sideways. 4-hour stochastic is in the buy zone. Okay. This is our weekly. Point 618. D extension. Okay. And back up here to our daily. And we're going to hit the weekly. Daily is way above that at 2308. So right now we'll just focus on that weekly level. Like so. All right. So that is where we are there. If I come down to the 1, right? So depending on what chart you want to trade it on. I'm just going to come to this low. Like that. And see how that goes. Okay. So I'm in no man's land right now on the 1. Right? We know that this was within that 4-hour, right? That range that's within that 4-hour AB boundary. Okay. So does it turn over, right? Come back down, retest that 2000 level, right? That would be a good spot to buy, right? If we can get price to turn over, which it may not. Okay.
Benny.
Yes.
So this is what I have a question.
Mm-hmm.
So with the even though the stock oscillator is a lagging indicator, when it comes to the misalignment, how can you read when the daily is in the sell position, but your lower frames are confirming a buy signal?
Yeah, well, you really,
That's not me. That's not me.
It's a beautiful concept, though. I ain't gonna lie. These are zones.
You really want them all to align, right? This is why you see prices whipsaw, Okay, like you see how you're not getting a lot of movement across here, right? You're not getting, it's just moving sideways pretty much. Okay, so you're not getting a strong trending moving price action. And a lot of times when it's doing that, right? So you can see here on the 4, this is just range bound. Okay, so it's just moving sideways. So you don't have alignment through your time frames, which is if you're sitting in this trade, you're getting whipsawed. You ideally want to wait for them all to be, preferably in the zone. Now, this one may come down, right? So eventually this one will come down, and it's an oscillator, right? So they come down here, okay? And if that's down there, you'll have, eventually you'll get it where this is up, right? And then back down. And then while that daily one is still, down, right, in the buy zone below 2020, right, you'll start to see this one creep back up, right? And so once you have that, then that's when you may start to see a move and you may start to see the trend start again, right? But if you use your stochastic as a major piece of confirmation, then when you have, say I'm trading my daily and my 4, right? If I'm trading my daily and my 4 and I don't have it aligned, I'm not making a trade. I'm not putting in a trade, right? Because if I put that in, I'm most likely a lot of time I'm just gonna keep moving, in a sideways direction, and if I'm looking to if I want to buy this, I don't necessarily want to buy it right now when I've got my stochastic that's approaching, right? That's in my sell zone on the daily. Okay, so I would say, if you play it like that, then I'm hands off. I'm hands off right now. Like I'm not even putting in a trade. Right? I'm not even putting in a trade because I just got misalignment, which is why look how long it's been doing this. Right? So that lines up to tell you like, I might not want to play that right now. Okay. So yes, I've got if I'm grading my trade and I'm checking the boxes, it's like, now if I got it at this point, right? This seems like way back when now, but here where we got that initial bullish move, then I'm still just active in that trade because I'm letting my trade idea play out. Right. If I'm playing this and I got my stop below the A, right? And I'm looking for gold to eventually get back bullish, okay, get back bullish, then I'm just letting this play out and do its thing. But at this point, I'm not adding another position right now. You follow me on that?
No, I follow you. I think what I'm doing is getting over the mental of the what I call it, rental fees, because I be holding them so long. So I'm thinking like, is it really necessary to hold it this long and pay the swap and the commission fees? You know what I'm saying? So it's like, how long do I want to pay rent on this? But then on the upside, I'm still credited with the PIP. So um that's what I was trying to get over, because I end up letting my stop loss hit on this. And I'm like, dang, I could have let this played out, but I was letting that fear and greed get to me.
Yeah, yeah. No, I get what you're saying. Yeah, if you're swinging, look, if you're swing trading and your target, right, you're like, man, I've got an upside target that I'm trying to get to, then you're sitting there and swing that stuff it'll all play out. It'll all play out over time. So if you're long, if your idea is that I'm long gold, then just let it play out. Like that's how I've always done it. That's how my mentors have done it. They didn't let the other stuff get to them. They just let it do its thing.
Because I
What
noticed
what
the plays that play good is the ones I forget about completely. I haven't
correct.
been trading my one account, And it played out nicely. And I wasn't even thinking about it. And it was nice. And it was like, what if I could have this feeling with everything, even consciously knowing I got the trade active? So, yeah.
And that's the level you're trying to get to, right? And so you're noticing those things. Why? Because you've been in the arena long enough. You're giving yourself a chance. You keep showing up for yourself every day, and you're starting to notice those things. Most people quit before they even get to the point to realize, like, man, when I leave my trades alone and I just let them run, look at the results that I'm getting. Look at the results that I'm getting. But if you quit or you go looking for 9,000 different strategies and don't give things a chance to work, right? Then this is what your account's gonna look like. That's what your account, your curve, that's what everything's gonna look like, right? During your trading career. And I know because I've been there, right? So, but look here, like look at this one here. Right? Look at this previous move. And that's the beautiful thing about using smart fibs is you could just go back in the past and see like, man, look how this trade went. And then you look back and you be like, well, we're on these charts. That's what the amazing thing is. It's like we're on these charts Tuesday, Wednesday, Thursday, Friday, Saturday. And those of you have been with us for a while, if you trade gold, okay, listen to me closely. If you trade gold and you follow the principles that we teach, and you look at your account and you weren't involved in this trade until the extension was hit, right? You have to ask yourself why. Is it the strategy's fault? Is it the market's fault? Right? Why? If I trade gold and that's in my trade plan, I'm trading with the trend and gold hit my level. And on this previous fit, we had, right? Take the stop out. We had a weekly level at 1929 that came into play, right? So that came up just shy of a 786. See, a D extension was the target. And I'm going over this because it is a mental battle, okay? And we tend to let, everybody on YouTube who's trying to sell us something that says, this is the problem, and this is the solution, buy this, right? Or buy that. And they know in the back of their mind too, until a person gets over the psychological issue, they're just going to keep buying products and they're never going to solve their problem, right? Because you're looking at everything on the outside and you're not paying attention to what's going on the inside, okay? So this trade pulled back. I'm a gold trader. My trade plan says, man, when it hits my level, take it, right? Work my risk management out. Why, what happened? I look back and I got 30 pips around that time off of gold. What happened? What's going on? It's a psychological game, right? Even after you do everything, I worked out my risk, right? Okay. I worked out my risk. What's going on, right? If we come back, weeks from now, and this price is gone and made us move, and you gained absolutely nothing, what happened? Who we blaming? Why are we blaming? Right? Why are we blaming? Why are we playing the blame game? never looking back or stopping once your trade has commenced. Let's take a look at this pound NZD. See if this New Zealand dollar is going to run out of gas anytime soon, right? What's going on with this thing? What's going on with it? Came up, right? Double topped. Start moving bearish, right? Hit that 209.74 level, start moving bearish, right? We had the morning star that confirmed, took us all the way back up to weekly resistance, then we turned over. Okay. This one is a tricky one to me. All right. Ryan and I have been discussing this one because pull this out. You guys looking at this from a bunch of different angles. Because I'm not necessarily long-term bearish on the pound. And I'm not exactly sold that the New Zealand is going to maintain, right, its strength over the long term. So we got a deep 8-6 retracement. The question is, do we start to move long from here? Right? Now, if you're a bear coming off this higher time frame, right, which I couldn't blame you for that, right? Because look at the rejection that we got. Okay. Weekly, that's a long-term stochastic, right? Our daily, right? We seem like we're starting to put in the low here. If we put in the low on this daily, right? Four, 73. So if we put in a swing low here, we can see this swing out of the zone, right? But we've got misalignment and everything here right now, right? We would need this to move back into our buy zone. Okay. So huge 80-20 play. The question is, do we stay within this AB boundary or do we take out this A? Right? So if you play the 80-20 to the downside, it's a beautiful move because it got bearish at that level. Right? So you can see here that 209.27 level. I've got that highlighted green, right? That reversed right out of that 80-20 zone. Okay. So now do we hold? So what I want to see, okay, is that got a break, we're moving sideways. Off my 4-hour chart, we move, if my stochastic moves back into that buy zone and we're still hanging within this AB boundary, I'm gonna go ahead and make the run on it. See if we can get bullish. Okay. Because by that time
Maybe on the daily, Benny, it looks like you had a inverted head and shoulder there.
Right here, right? Right? Bullish head and shoulders.
Yeah.
I like it. Like it. Right? I didn't even see that. Man, this group is good. Drop some sevens in the chat. Because I paid no attention to that. I just know price was pulling back and starting to settle. All right. Nice. So that kind of confirms what I'm thinking. Appreciate it.
Welcome.
Love it, right? So let's see if we can confirm, right? This low. Okay, see if we can confirm that low and see if we get that move. Our daily stochastic is back in the buy zone, so we've got some misalignment right now. Right? And what I'm gonna do is I'm gonna take this out. It's technically you have one, but it may just move sideways. But let's see, right? So we say that it typically takes between 7 and 11 candles for your stochastic RSI to move from buy zone to sell zone to buy zone, right? So let's see how this is going to play out. Now, if you're trading a zone, right, and you put this is at an 8.6, and you put a small position in, right, where you are now, the risk to reward could be huge on that, right? You would be early, okay? Early, you got an 8.6 pullback, right? So we expect what? 118 extension if that gets going, right? So you see the game we played, right? So it's a deep correction. 80-20 played out was a monster, right? This moved, right, all the way 382, 296, 61.8, 400. At its lowest point, we came in at 536, 535, and then where we are now. Okay, but you can see how we've oscillated all the way back up to the top, and we're just moving sideways. Okay, so the volume's not necessarily there yet. And we're not catching definite bids, right, to start a new trend. But let's see, right, what we can get out of it, right? So we look at the NZD, highest levels of 5 weeks, been in front of greenback weakness for the Reserve Monetary Policy. Reserve Bank of New Zealand Governor Adrian Orr noted last week there was still work to do on bringing core inflation lower, but acknowledged that the risk of over-tightening policy markets part back the odds of a rate hike, right? So rate hike, right, to increase now is below 50%, whereas they were thinking fast, maybe another rate hike out of New Zealand, right? But now it's below 50%. Latest data revealed that New Zealand's inflation expectations had dropped to their lowest levels in nearly 2 years in the first quarter, suggesting that the previous rate hikes had been effective to curb prices. Okay. So let's see what happens on that. That's my take. It's a nice deep correction. The upside potential versus the risk could be huge. See what we get. That's my thoughts on this pound NZD right now. Is are we gonna hold up in this zone? If not, we're gonna take that A out, and then we'll have to revisit some things. Right? We'll look at the fundamentals to see if there's a possibility of this continuing this bearish move. But I don't know. I'm not quite sold on it yet that it's going to continue to fall short. It's just a question of whether it's going to hold up within my AB boundary that I've got drawn there. Any questions on that? Jeremy said, overall, the UK is out of recession based on the fundamentals, so I'm going along on this based on my zone.
Is there any correlation with your Euro and Great Britain?
Sometimes it depends on what fundamentals we're looking at, right? That's impacting the area. Sometimes, but not all the time. I'm with you on that one, Jeremy. I'm a pound bull. It's just taking some time. It's just taking some time. That's okay. Don't need to apologize. It's a great question, right? It's a great question that you had. Okay. So but sometimes, like I said, sometimes there are. That's why you see that Euro GBP can be tough to trade, right? At times. right? It's a pair that's choppy. Oftentimes it's really choppy because of that. So that's a great question, Troy. Jeremy, I like your take on that. That's where I'm at on it. Like on the pound Aussie, you know, small position on that one. Because I'm just thinking that I'm thinking long. Like if we go, sorry guys, if we go and we take a look at um the pound dollar right now. And how that's picking up. See, look. Yeah, that's a 15-minute play. Like that's pushing long right now. Right, that's pushing long. This pound Aussie is taking a while to get going. Right, but you could like here, you can see how that swing is holding within that AB boundary. You know, like I'm not sold on pound weakness right now. Of course, I could be wrong. Right, right. Of course, I could be wrong. But you can see how this play here is hanging in there on this pound Aussie 30-minute. And it's still hanging. So I'm saying, like, you have to just make the play. Like Joy was talking about how she sits and trades, and Jeremy, I know Jeremy trades those C to Ds, right? You know, they take time, but it's all about risk management, right? Your technical summary is bullish on an hour and a 5-minute on a pound NZD. Appreciate the update on that, Jeremy. Yeah, I'm with you on that, right? And I know you're over there, you know, keep an eye on things. I'm a bull. And like I say, it could be a timing thing. Sometimes it's like, man, you know, you look back and you're like, maybe, hey, I got stopped out. Then you look back weeks later, and you're like, man, look at the trend now. It's running. So my timing wasn't right, you know. Um, but I'm like, I have this trade in, like I'm just gonna leave it and let it go. You know, the pound dollar, like I'm just gonna let it go and do what it's gonna do. And that way it just alleviates the headache for me in my trading. Like I come up with, I try to develop my directional bias. I come up with a trade idea, and I trade my zones. Right, I trade my zones. Like as sloppy as this has been, it's moving up. Right, it's been moving up. We got a deep correction. So right, this last fit played out. So we'll see if we can get another cycle. Another cycle going through. We'll take a look at this pound CAD. Right, this is another one on these pound, and this get movement. Look, right, look at that swing. Yes, it's a mess, but you have to ask yourself: is it within my AB boundary? Is it in my zone? Yes. Right. We have to give ourselves time to let our edge play out. And that's why we harp on risk management, right? Big time in this group, because then you don't have to, you can sit in this trade and let it run, and you don't have to tie your account up. You're not over leveraged. You're trading small. We're teaching you guys, like, these are huge moves, right? So off this 786, right? It's 229 pips. We're not talking 5 and 10 pips, everybody. These are huge moves. So a lot of times people come into it and they trade large, right? And they don't catch a lot of pips. And then they get beat up pretty bad in the market. we're saying, hey, we've got a methodology that can show you how to accumulate pips over time, right? And these bigger moves, and you could trade a lot smaller. Okay. And your curve will be a lot smoother, and you'll get better results over the long term if you let your edge play out. It's a huge difference in what we do here. It's a huge difference. That's why we cycle through all the pairs, right? So you could be in a pound dollar right now. That's why we teach you how to work the math out. You could be in a pound dollar. You could be in a pound CAD. You could be in a pound Aussie. You could be sitting in a pound New Zealand like, okay, these other ones are going, but that one hadn't started yet, right? Oh, okay, the pound New Zealand hit the stop, but I'm still up 200 something pips on the pound CAD. On the pound Aussie, I'm up 100 something pips. Pound dollar, I'm up 100 something pips. Okay, I got stopped out of the pound New Zealand. Okay, it wasn't time for that yet. Made a deeper correction, but I played the 80-20, and even though I got stopped out on the C to D, I played the 80-20 and I made 200 and some pips or whatever. You know, like that's, and you're constantly gonna have trades cycling in and out, right? And so we come and we look at your pound Swissy. Right? So we know this was the last play, 262 pips. Had an 85 pip stop loss on that. We got 262. Okay. Now here, right? That's not in my zone. Right? That's not in my zone. So that's not my thing. Right? If I got out at 262, it hasn't come back to me yet. Okay. So you can see here, I didn't get the deep correction, right? We got a 382 with some structure there. Some people may play that depending on your trade plan. Just be consistent. But I would need it to come back here and hit my level, right? And so you can have a buy limit set at this level. And if it hits your buy limit, then you activate it. If it doesn't and it continues to run long, then you just delete your buy limit, right? That one didn't work out. Okay. So we'll see what continues to happen with these pound plays.
So, Benny,
Yep.
I want to ask you if I'm wrong in this. So, if you can bring up that chart back up.
Which one?
The one you just
Pound
left off.
Swissy?
Well, yeah,
Okay.
just for visual. And
Mhm.
what I'm working on is my exit plan, because I had such a tough time getting in, and now I feel like I master of entry. Now is maybe what would help my fear and greed is making sure that I have a significant exit plan. So say if I take what I started doing is that first fib where your stop loss is. Say if I end up getting in there at 8426. Say if I got in there. So I'll be waiting for a price to reach that next D extension, placing my stop loss for that to be, I'm okay with this percentage, whether if price continues to hit the D extension of the current active fib of not. And that's what I'm doing. Am I playing myself short? Or I understand it's all up to me, but am I playing myself short?
What, if you got out at this extension?
Yeah, well, not necessarily that extension. Yeah, if I got out that extension. I'm sorry, yeah.
No, that trade I did played out. You're not playing yourself short because right? That's a 3-to-1. That's a 3-to-1 trade. That trade idea is over on your 4, right? So if you that's a pretty significant move there. So that's a winning trade if you get out there. So no, you're not selling yourself short. I know you're thinking about like maybe the longer term move, but you can always get back out after the pullback. So if your 4-hour chart, right, and that's why we say, hey, go ahead and establish what your you know, what your time frames are going to be, right? Are you going from the monthly, weekly, daily, then you're stopping on the floor? If you are, then this is your play and you're out. That's 262 pips. Now, if it comes back to your level, again on this move here, then you get in and you buy again. If at that point in time, fundamentally, you're still saying, hey, I'm bullish on this pound, right? There was the Swiss is weak. I'm bullish on the pound. I'm going to look to buy again. Right? So no, you're not
And
selling yourself short. You're not selling
okay,
yourself short. No, that was the idea, right? So in this case, this was the idea that we posted. That's the play, right? I think when we sell ourselves short is when we get out of the trade prior to that extension being hit.
okay,
You get what I'm saying?
yeah,
Because now I'm not letting my trade idea play out, because think about it. I get out at 50 pips, right? Oh, I'm up. I'm seeing my phone. I'm in the blue. I'm out at 50 pips. I'm taking it. Well, if you come to this next play, okay, let me move this over. Okay. If I come to this next play and price pulls back to my zone. So you're like, I got out at 50 pips. It's like, man, I left over 200 pips on the table, but I made some money, right? And I come and I get into this next move, like so. Perfect scenario, I enter at 61.8. And my stop on this is 114 pips. So say these are the first two trades I was involved in, period, in my game. My first trade, my target was 262. I got out at 50. Now I get in again on my next fib and I lose that trade, right? And it hits a 114 pip stop. Now I'm net negative. You get what I'm saying? Now I'm net negative. I gained 50 pips on the last setup. I cut it short. I played myself short. Now I get to the next fib and it hits my stop. And I just lost 114 pips. I'm net negative. If I let that first trade run 262, and then I get to my next trade and I lose 114 pips, I'm still net positive 148 pips, even with the loss. I'm trading at 50% and I'm up 148 pips. Everybody follow me on that? Drop me a 2 in the chat. Right? I'm not talking about scalping or anything else, right? Those are all methodologies, right, where people can make money. I'm talking about swing trading. Okay. The blessing of the curse of swing trading is that, yeah, you're going to be in some positions where you are up and pretty good, and something happens in the market and you end up losing that trade. You just have to understand that that's part of the game when you're swing trading. There are going to be trades where you may be up that 50 pips and then it comes back and it hits your 85 pips, right? That's the game. It plays out over time. The edge plays out over time. It's not going to happen over 1 or 2 trades, right? So think about if I like we always say it, right? If I'm in a 3-to-1 scenario, I only have to win 3 out of 10 trades to make money. If I'm in a 2-to-1 scenario, I only have to win 50% of my trades to make money at the end of the day, to come out net positive. So the framework that we teach and how we use the fib, like it puts you in the driver's seat to where your direction, where to get in, where to get out, your risk to reward ratio. We teach you how to calculate your pips by taking your risk percentage divided by your stop. Like it's all there. All right. It's all there in one framework. And we're taking the same approach to every pair. So it's not a, well, with this pair, we look at it this way, and this pair, the way it moved. This pair has his own personality, and this pair has. We don't do that in this group, because to be quite honest, that's a headache, right? But in this group, you do have to develop a great deal of patience, right? And you don't have to be in 40 transactions, right, to make 262 pips. You just had to pull the trigger once, right? And we're not even talking about developing a skill set of dropping to a lower time frame and catching a pullback on the 15 and adding to that 262 pip trade. But we're not even at that level, right? We're not even there. We're just saying, hey, this is my position, 61.8, 786, right? Letting it float within the AB boundary and keeping it moving. The result is the result, right? Never looking back or stopping once your trade has commenced. Because the pain is when you constantly are on your charts and you look back week after week, month after month, year after year, and you say, man, these trades win, it's 200, 300 pip, like, but why doesn't my account reflect that? I had it right. What happened? I'll tell you what happened. Trade psychology. It's not the indicator. It's not the moving averages. It's not 50 million different terms that really mean the same thing. Support, resistance, supply and demand, all this stuff. Smart money concepts, ICT is what's going on between your own two ears. Ryan, anything before we close out?
Masterful session, bro. Appreciate the breakdown. Benny said this at the beginning of the week, and it's legit all about getting back to the basics. Back to the basics, right? Step by step, one by one. And as we continue to, I'll say, refine that and solidify that in our minds, right? The better we become at the basics, the better we become. We win. Whatever your definition of winning is. Appreciate you, bro.
Yep. Hey, we'll see everybody tomorrow morning, 7 a.m. Eastern Standard Time for the weekly Forex ritual. Enjoy the rest of your Friday, everybody. Bye for now.